Global stock markets experienced one of their worst days in a couple of years on Wednesday after disappointing tech earnings made investors reassess the costs and benefits of the AI technology. But FX markets didn't have a great day either, excluding the Japanese yen. The US dollar faced a huge sell-off, while other currencies, European, Australian, and New Zealand currencies also were one of the markets that struggled on the back of rate cut expectations and signs that the US and Chinese economies, the two biggest economies in the world, are probably facing some economic fragility. So let's have first a look at what happened in dollar yen. As you can see from the chart, dollar yen has broken out of this bullish channel and continued to trend lower, confirming a bearish trend reversal after falling below its previous low around the 155 level. The pair is facing another negative day today. But what's interesting here is that the price is already near its 20-day moving average at 151.55 and not far above the 50% Fibonacci retracement of this uplift near 151. So that area might be a pivot point given the fact that both the stochastic oscillator and the RSI are already near their oversold levels, increasing the case of an upside reversal. Now, if that area proves fragile, if the sell-off continues below that territory, the next support could emerge somewhere between 149.85. This has been a key constraining zone a couple of months ago, while lower than that, the descending trend line coming from the 2023 low might be another interesting area to watch at 148.53. This area coincides with the 61.8% Fibonacci mark, so it might attract special attention. Now, if the pair were to reverse to the upside, if upside pressures resurface, the initial resistance could come near the 23.6% Fibonacci of 153.65. Higher than that, I would also pay attention to the 155 and 156.53 territory. This is where we can see that there are two constraining broken trend lines around this area, while the 23.6% Fibonacci of 156.82 is also nearby. So that area could block upside pressures ahead of the 50 and 20-day moving averages, which are converging towards the 157.90 territory. Now, what could improve the outlook? Well, probably a break back into this bullish channel could improve market sentiment. Nevertheless, only a decisive rally above the 161.30, 161.94 resistance territory, where this rally peaked earlier this month. Such a move could only could resume the bullish outlook, likely adding more impetus to the price and probably driving the price towards the 164.43, 166 region, where these key ascending trend lines are located. Now, looking at pound dollar, where surprisingly the pair didn't face a bad day yesterday. Basically, it closed almost neutral on the back of some encouraging PMI data. But that doesn't mean that this downfall might soon stop. If we look at the technical indicators, the RSI is still trending to the downside. The MACD has just fallen below its red signal line, so the risk is still skewed to the downside. And what we are waiting to see is whether the pair will continue to fall below the 20-day moving average, currently at 1.2850. If that proves to be the case, if we close below that line, then I expect an aggressive decline into the 1.2725 and 1.2750 region, where these key trend lines are placed. Lower than that, the next stop could be somewhere between 1.2580 and 1.2637. This is where the 200-day moving average and this longer-term ascending trend line are all placed. Well, now what could improve for market outlook? Well, perhaps a break above the 1.29 level could reduce downside risks, likely driving the price back towards the 1.30 key wall where this rally, the latest uplift peaked. This region also coincides with the 161.8% Fibonacci extension of this downfall. So a close above it could attract fresh buying, probably towards the July 2023 high of 1.3141, while not far above that, this resistance trend line coming from April 2024 could be another key territory to watch near 1.3188 at the moment. And finally, looking at Euro Pound. Euro Pound is gaining some positive momentum today. It faced a negative session yesterday, but it posted only moderate losses, and it's currently back in the recovery mode, heading towards its 20-day moving average at 0.8427. What's optimistic here is that the price refused to reach this support trend line. It paused around slightly above its 2-year low of 0.8381, and that makes that increases the odds for an upside reversal. Nevertheless, that doesn't mean that we won't face any obstacles soon. There is a key thread around this falling trend line, currently seen at 0.8437. Then above that, the 50-day moving average, which blocked the way higher back in earlier this month, could also be another barrier around 0.8460. Higher than that, I expect an advance towards the 0.85 region, where this tentative descending trend line is located. That could restrict upside pressures before we head towards the 61.8% Fibonacci of this downleg at 0.8532, while not far above that, the 0.8572 might attract significant attention, as this is where the upper boundary of this broad bearish channel is located. Well, from a technical perspective, there is risk for some recovery, given the fact that the RSI is trying to recoup some extra ground, is deviating above its 30 oversold level. The MACD is also climbing above its red signal line, so that increases the odds for that suggests that upside pressures could persist in the short term. Nevertheless, if the price reverses to the downside and moves below the 0.8381 low, the lower boundary of this bearish channel could come first into view around 0.8362. The 0.8340 barrier taken from April 2022 could be another key spot to look at, actually the 0.8340 is the low from July 2022, so that could be another key territory to watch before the pair experiences a sharp decline down to 0.8282. This has been a key supportive territory as well back in 2022. So that's all about the most interesting pairs that I found for this week. Thank you for watching, and see you next time. Bye bye for now.